Hello everyone. This is the pre-market report video for today, 18th July 2025 for the Indian stock market, focusing on Nifty and Bank Nifty. First, quickly let's see what happened yesterday. Obviously it was expiry day, so that related influence was there. In addition to that, there were things that influenced our market, such as Citigroup downgraded Indian equity to neutral from overweight. On the other hand, they upgraded China and South Korea. And that's one of the main reasons yesterday why China and South Korea market was closed positive despite the negativity in the US future market. Here, Citigroup acknowledged the fact that the Indian economy is stable and India expects to get the better trade deal with US than that of China or South Korea. But from the valuation perspective, for the present earnings per share and for the immediate earnings of Indian companies' potential, they felt it's expensive. And also they said in this year end, Nifty expects to reach 26,000. So basically in short, Citigroup expecting Indian equity won't increase quickly from the present scenario. Hence, that also one of the very important reason why yesterday Indian market was negative. Sector-wise, IT, defense and banks were down around 0.5 to 1%, while metal, consumer durables, realty sector added 0.5 to 1%. Here, banks were down as at that time Axis Bank results was due, so result-related panic profit booking pushed it down. Among other individual stocks, HDFC Asset Management increased near 3% as their quarterly profit increased 24%. Then another company called Sona BLW Precision increased massive near 7% since CNBC TV18 reported the news that this company is in advanced talks with China's BYD for supplying electric vehicle components. So overall the index closing negative, the broader market was very neutral. The advanced return ratio of listed stocks is very close to 1:1. Then about institution, no stop in FII selling yesterday accelerated the selling. The net sold for 3,700 crore rupees, whereas as usual DAI to some extent they supported the market as they net bought for near 2,820 crore rupees. Then coming to the derivative market, because of the weekly expiry, 37% of the open interest were unwound or expired. Here the interesting thing is usually the expiry related unwinding always skewed towards one side, but yesterday it was very much neutral. Both call options and put options expired roughly the same percentage, around 38%. And index futures open interest increased by 1.3% as their contract is always monthly. So based on the rough remaining 60% open interest, each participant's respective stance enhanced crazy. From net 5% open interest on the bullish side, retail traders increased their positiveness to net near 13% of their open interest on the bullish side. On the other hand, both proprietary traders and FII increased their respective bearishness. After the yesterday close, proprietary traders having net 7.2% of their open interest on the negative side. Similarly, FII having net 5% of their open interest on the bearish side. Then about index future, there is no major change. Retail and proprietary traders having 64 and 56% of their open interest on the long side. On the other hand, FII holding 83% of their open interest on the short side. So those were the quick takeaway from yesterday's Indian market. Then coming to US market, last night before their market opening, Census Bureau released the June month retail sales data. Surprisingly, on both cases, headline and core retail sales on June month, it increased significantly compared to May month and also it was above the expectation. Core retail sales data increased 0.5%. In comparison on the May month, it was contracted, and the same case for headline retail sales data as well. In the May month, it was contracted by 0.9%. That in June month increased by 0.6%, which market took that as very positive. In addition, Pepsi, GE, United Airlines all posted good results. So US market scaled the new heights. In the end, Dow Jones increased by 0.51%, S&P 500 was up by 0.54% and Nasdaq increased by 0.74%. In case of VIX, it decreased by 3% and moved to 16.5 from around 17 on day before yesterday. Then, regarding oil, there was a drone attack on the Iraq oil field, which in turn increased the oil price by 1%. At the time of this video, WTI crude trading around 67.5 US dollars per barrel, whereas Brent crude is at 69.5 US dollars per barrel. Moving to Indian ADR, after the Indian market close, Wipro released their quarterly results. In both the metrics, revenue as well as in profit, Wipro beats the analyst estimation. Hence, in the ADR market, Wipro ADR increased above 3%. Other than that, ICICI Bank and Infosys closed mild negative less than 0.2% and HDFC Bank increased like 0.5%. Here, yesterday in the Indian market, all those stocks were significantly negative. Hence, at present, all the major ADR and including Reliance GDR indicating the positive arbitrage of 0.5 to 1%. One more thing, unlike the Wipro on the banking side, Axis Bank posted moderate results since their NPA increased and also profit was down by near 4%. So we could expect both Axis Bank as well as Wipro to be on focus today. Thus, as a summary, global momentum improved compared to Wednesday night, and in addition, Wipro posted good results. In line with that, Gift Nifty early morning today traded at 25,216. So equating that with the spot market indicating the gap up opening of around 50 to 70 points. Moving on, yesterday as per stock open interest, RBL Bank, L&T Mindtree, Tech Mahindra, Amber Industries, Polycab and Wipro are some of the 71 stocks that got an increase in open interest along with a negative close indicates the short build up. On the other hand, Phoenix Limited, Havels, Blue Star, Prestige, HDFC AMC and Jindal Steel are some of the 40 stocks that got an increase in open interest with a positive price close indicating the long build up. About the things to look out, Reliance Industries, JSW Steel, Bandhan Bank, Hindustan Zinc, India Mart, Indian Overseas Bank and L&T Finance are some of the major Indian companies' earnings results are still released today. Then during weekend, HDFC Bank, ICICI Bank, Union Bank of India and AU Small Finance Bank are some of the major Indian companies' earnings results are scheduled to release their respective earnings. In terms of macro, there is nothing that I'm aware of is scheduled release during our market. However, after the market close, India's bi-weekly loan and deposit growth and for US, lot of housing related macros like building permits and how many houses they start to build, etc. and Michigan future inflation projection are some of the important items we need to keep an eye out today. Coming to technical, Nifty opened positive but throughout the session it continued to slide and closed near to the lowest point of the day, 25,100 mark. Thus on the daily chart, Nifty formed a long bearish candlestick pattern which is the first negative. In addition, yesterday Nifty reached the 20-day exponential moving average around 25,230 for the third consecutive session. But again in all 3 days it failed to hold above it, which signaling the strong resistance. So unless Nifty decisively surpasses this level, the current consolidation phase may continue with immediate support at 25,000 followed by 24,900. However, sustaining above the 20-day exponential moving average could open the door to 25,400. One more thing, momentum indicators also signaling negative as RSI dropped below 50. Then in case of Bank Nifty, similar to Nifty, opened on the positive region, but throughout the day it slides and closed below 57,000 mark. Thus on the daily chart, Bank Nifty also formed a long bearish candlestick pattern and it failed to close above the falling resistance trend line which is considered as negative. However, it continued to defend its 20-day exponential moving average around 56,800 level for the fourth straight session, making this zone crucial for further direction. So, 56,600 to 56,500 will act as crucial support, and if Bank Nifty slips below 56,500, then the next crucial support is placed at 56,100 level. On the upside, 57,200 to 57,300 zone will act as an important hurdle. On the options front, the maximum call option open interest was at 25,200 strike followed by 25,500 and 25,300 with maximum new call option rating at the same point 25,200 strike followed by 25,500 and 25,300. On the put side, the maximum open interest was at 25,200 strike followed by 25,000 and 24,900 with the maximum new put option rating at 24,900, 25,100 and 24,500 strikes. Thus, from options data, it's suggesting a strong resistance at 25,200 mark, followed closely by 25,500 with strong support at 25,000 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this. I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.